Hello and welcome to interest.co.nz. I'm Gareth Vaughan. I'm joined by Matt Whineray, the Chief Executive Officer of the New Zealand Superannuation Fund. And look, Matt, thanks for joining us. Appreciate your time. Now, obviously, we live in very interesting times, and the Super Fund gave an update, I guess, of your 2019 performance in mid to late February. And at that point, you were expecting, I guess, a less turbulent market. Obviously, that's not how things panned out. March the 20th, you came back and said that the fund had shed about 20% of its value so far in 2020, which was pushing $9 billion. Now, obviously, financial markets have changed again since then. So how's the fund faring now?
That's right. We have seen a significant rally since those times in the middle of March when markets really were tanking. So the numbers, end of December, we were about 46.5 billion. End of March, we were at about 38 billion. And in the middle of March, we were lower than that. And now we're sort of 41.5, 42 billion, somewhere around there. So we've seen a significant reversion of that, or reversing of the significant falls. And we've recovered probably, certainly more than half of the fall that we've seen. It's been a very volatile time, and that continues. From one week to the next, you're never quite sure. End of last week, US markets fell sharply, and then started this week back up again. So it's all over the shop.
So how does an investor like the New Zealand Super Fund invest in this environment? I mean, are you changing any of your focuses, any of your timeframes, any sectors or industries you're keen on, or anything, or asset classes?
Yeah. So firstly, in terms of how we manage the portfolio in times like this, we focus on a couple of really important things. Firstly, rebalancing, and so that means that we want to maintain the same risk profile through time. So if it moves away significantly from that because equities have fallen significantly, that'll see us buying equities to rebalance the portfolio. The other thing that we're doing is we want to make sure we've got plenty of liquidity. So when you see big falls in asset markets, equity markets, and you see a big fall in the Kiwi, that can be a drain on our liquidity. So we maintain higher than normal levels of liquidity to manage that sort of volatility. And so then that's the sort of the BAU. You got to manage the portfolio, and that's what we do. Stick to the same risk targets, maintain more volatility. Then the next couple of things we do are we run a program called the Strategic Tilting Strategy, and I've talked to interest.co.nz about that in the past. That's a contrarian strategy. So as markets fall and their price falls below what we think their long run value is, we'll be buying those. So we'll lean in, and we did that as markets fell through February, March, or into February, March, and as markets rebound, we'll start to sell some of that. So we'll sell the extra equities that we've bought, and so that's a very active strategy. We trade equity markets and bond markets and currency markets with that. And then the next thing that we do is we say, okay, has anything changed about our long run assumptions about how we think markets work and how they'll operate over time, and what do we think interest rates are going to be over the long term? Obviously very low in the foreseeable future, next 10 years, close to zero, basically. But what do we think about the long run equilibrium? Are those things changed? Are earnings changing over the long run? Are there sectoral changes? Are there country changes? That's the activity that we're doing at the moment.
So can you give us a flavour of your thinking in that area? Because obviously COVID-19 is affecting some parts of the world much more than others. I mean, in New Zealand, we're doing well against the virus. Australia is also doing well. Obviously, the US and Europe are in particular being hit really hard. So does that change your views on some of those countries as investment opportunities?
Yeah. So at the broadest macro level, we certainly think that interest rates are going to be lower for a long period of time. So we lowered our long run assumption for rates. Then the next bit of work we're doing, and it's a little bit too early to tell at the moment, is how do the changes and the impacts on different sectors, some are clearly being hit harder than others. Service sectors right now, while we're in lockdown, are obviously severely impacted. but more broadly, tourism, those types of sectors are going to be significantly impacted through this period. What we're trying to do is think about, in the long run, what is the long run level of earnings that we can expect from different markets, because what that does is build up to our views on value in those markets. And it is really just a bit too early to say. We can all sit here and say, well, clearly there's a big impact on tourism right in the here and now. There's other questions about, well, what does this do to real estate? Because as you and I are talking to each other now, we're not sitting in an office anymore. What does that do to commercial real estate? What does all the online shopping do to retail real estate? That kind of thing. So we're still working through a lot of that, and then that will flow into those views on long run earnings in different sectors and different countries, and that's going to take a little bit for us. It's just going to take a little bit to get data, because you get a little bit of data, but is that indicative? We're all in this lockdown period at the moment. When we're not in it, what does the world look like?
And that's the billion-dollar question at the moment, isn't it? And I guess we're seeing people forced to live differently and work differently at the moment. And I guess one of the big questions around at the moment too is, to what extent does this impact on how we live and work in the future, which you've alluded to in terms of real estate? There's a lot of talk around global supply chains, resources and medical equipment, this type of thing. I mean, are you anticipating that there will be significantly different ways of living and doing business, social distancing, this type of thing, in the long term? Or do you think this will just be until we get a vaccine or some sort of solution, antivirals to COVID-19, and then we just go back to how we were?
Well, I think in the long term, once you get, I guess the sort of the trite comment is, you can't have a fully functioning economy if you've got an uncontrolled virus. So you've in a world where you've got a virus that's not under control, whether by vaccine or immunity, then you've got things that are being done differently. When you are there, then there's no reason you shouldn't be in a where you are there in terms of having controlled it. No reason you shouldn't be back to things, but clearly things will have changed. There'll be businesses that don't exist anymore. There'll be changes in consumer demand patterns around things like transport and tourism. There'll be changes in business demand patterns around, for example, real estate and that kind of thing. And I can see that happening for us. I can see, we managers and custodians and that sort of thing overseas, and we see those, and we've got investments overseas as well. But I think what we've seen in the last 6-7 weeks is a ramping up of the use of technology caused by this crisis, which means that I can see that changing quite a bit going forward in terms of how we operate. We've seen some other things in terms of how we operate our trading programs, and I think we can be more efficient in some of those things, and again take some permanent lessons out of this crisis to go into the world, whatever it looks like after this.
You mentioned transport there. Now, obviously, the super fund's been very interested in the Auckland Light Rail project for a while now. Public transport in the times of social distancing is obviously a bit challenging. Do you still remain really enthusiastic on that project? And have you heard any developments? I mean, are you looking at any other of the so-called shovel-ready projects that the government may look to get underway as soon as possible?
So the answer to the first question is yes, we remain enthusiastic about it. I think there's questions to be asked about, well, what does this type of crisis do to drivers around use of public transport and density and of living, that kind of thing. But yes, we remain very enthusiastic. The government's obviously had a few things to deal with of late, so there hasn't been a decision yet on that, and on who the preferred delivery partner is. So whether that's NZ Infra, which is us and our partner CDPQ, or NZTA. But we expect that there will be a decision on that in the next month or two, and then if that's us, then we can crack on with it. In terms of that shovel ready question, obviously I laugh a little bit at the shovel ready because there's not many things that actually get built with shovels anymore. You know, I think the Waitaki hydro scheme was built with shovels. I rode down that on the Alps to Ocean bike ride over Christmas, but you know, back in the 30s and the 40s, they were building those things with shovels. Now, obviously, there's a different concept there. You know, light rail is a good example, which is there's a lot of work to be done before you get to digging anything. But there's a lot of spending done in that time. So I think the way to think about that is, does this project drive economic activity? And certainly the answer to that is there's tens of millions of dollars to spend through that near-term process. Other shovel-ready projects, look, we're interested in opportunities. Talked yesterday on the radio about other opportunities, particularly in and around the long-run climate adaptation. We continue to be interested in renewable developments. That's offshore, mostly US and in Europe. But here, yes, look, we recently bought a chunk of land out near Formosa. That's a land development opportunity, and there are other ones that we're looking at that could provide, you know, immediate economic activity.
Obviously, there's an immense uncertainty in the world at the moment in terms of, you know, how bad does the COVID-19 crisis in terms of the actual virus get? It's still playing out, and then in terms of the economic impact, how bad that is and how long that lasts. I mean, just with that light rail project, you mentioned the density of living. There's been a push towards that, which obviously suits public transport. I'm just wondering, how, in terms of your project like that, how do they change in this environment?
In terms of our assumptions?
Yeah, your assumptions and the you know, cost of capital, the return on investment you would want, that type of thing. Does that change in this environment?
We have to think about all of those things. So there's sort of two things that go on with the cost of capital. One is what's the pricing of the things that we're selling. So, you know, if equities have fallen and the forward-looking returns look higher, then obviously, you know, that's an input into the cost of capital. If the things we're selling, which are bonds, are very low expected returns on those for a long time, then that's another impact on the cost of capital. So, but on the flip side is what do the cash flows look like that you're applying that to, and that goes to that question about how are these things, does the usage case change for the asset that you're looking at. And that's the same. We'll do that with any investment, not just the light rail. But that's something that we'll certainly be taking a look at. Is does this change how we think about those key drivers? I think, you know, we're going to continue to need a solution to Auckland's transport issues, and we think that this is a good one. It's a mass transit. It's also very consistent with the principles released by the Climate Change Commission around the business recovery, which is to say, let's not do something that puts us backwards from a climate perspective. Let's use a good climate lens so that we're building things with lasting benefits. And clearly that's what the light rail does. It shifts people from a mode of transport of driving in a car with an internal combustion engine into something that's driven by our predominantly renewable generation electricity system. So I think there's some positives in there that line up with the principles about what do we think about as we put these in, because we don't want to do these things just to get sugar hits, for the economy. That they need to have lasting benefits and not lock in lasting detriments.
You mentioned climate change remediation in there earlier. That's obviously you're talking through the climate change aspect of Auckland Light Rail. Any other individual or specific projects in New Zealand in that sort of area that you are kicking the tires of or interested in or cooking up, indeed?
Yeah, look, I've been talking to Rod Carr, the chair of the Climate Change Commission, and some of the things that he's thinking about are what are those adaptation projects? So not just the mitigation, which is hey, can we get some more renewables because our system is pretty dominated by renewables at the moment, but things that he thinks about, like upgrading the transmission capacity to be able to distribute that so that when you do transition your transport fleet to electric rather than fossil fuel driven, you've got the means to distribute that safely and effectively. So that type of thing, electrification upgrade of the transmission infrastructure. Other things, there's other interesting ones that are much more nascent, I think. Things like retreat or protect projects where you're thinking about where are those places that are going to be physically impacted by the change in climate, the rising sea levels, the increased storm activity, and what are local governments doing about changing that, and how would you finance that? So that's quite an interesting area, I think, for further work.
Look, the current government obviously resumed contributions to the super fund. Obviously now they find themselves in a very challenging economic time. There's massive demands on taxpayer money. As we sit here today, are you still anticipating that the budget next week will announce a continuing government contributions to the super fund?
Yeah, no reason to believe that it won't. So I hope that continues. We saw the impact of ceasing them last time. Cost the country quite a significant amount of money in terms of foregone returns. But ultimately the government has to manage its fiscal position. But no reason to believe that won't continue.
Okay, and look, just in terms of New Zealand, I guess finally, we are doing well in terms of combating the virus. Obviously it's not over yet. We've seen second spikes in some other parts of the world, but we're looking like we could be, with our near neighbour Australia, we could be coming out of this this earlier than some of the bigger countries around the world. You've floated the idea previously of having a nationally significant infrastructure regime to bring in international capital with a low tax rate. Are these the sorts of ideas that you would think we really now have a good opportunity to pursue?
Yeah, I think that's a good idea. We made that in our we made that proposal in our submission to the tax working group, and they thought that was a good idea and should be taken up as part of the work program for the Crown. But I think certainly as we look forward and we think that we have significant infrastructure needs, we think there's a great opportunity to bring international capital with international capability as well and experience to be able to solve some of those. So we'd hope that type of thing doesn't get lost in all of this. Obviously there's a crisis to manage, but there's also in that crisis the opportunity to do things differently, and we continue to encourage that.
Okay, well look, thanks a lot, Matt. That's Matt Whineray, CEO of the New Zealand Super Fund, and I'm Gareth Vaughan at interest.co.nz.